Well, the market bounced back today, and it actually had a pretty good day, up 0.63%. That's the NASDAQ. But you know what still didn't bounce back despite the NASDAQ being up 0.63%? It's comical at this point. PayPal was down 0.25%. That can't catch a bid. And Tesla was down another 2.3%. Both these companies, it seems like nobody wants to own them except for me. So I have to ask myself, am I a sick individual? Like, why am I the only one that seems to want to own these companies? And to really pour salt on the wounds of Tesla, it's down 27.3%, by far the worst performer out of any of the mega cap 8 stocks year to date. And I've just kept buying. I bought some shares at 180, I bought some more at 190, then I bought some more at 180, and then probably tomorrow I'll be buying more in the 170s. And it's all over the internet. People think Tesla's going to go to sub $100, and that's why you shouldn't buy the stock. I tell them to bring it on. If that happens, I am loading the boat, because right now, at $173, whatever it's at right now, I view Tesla as undervalued. So if it goes even lower than this, it's just even more undervalued. And if your favorite candy bar at Walmart is on sale 50% off, are you going to skip that opportunity because you think they might discount it even further the next day? Probably not. You're going to go buy that candy bar. It's the same thing with Tesla. I think long term, even if it does go lower from here, I'm going to make a lot of money by owning Tesla stock. Now, what's one way that Tesla could keep going down further? Well, it's actually the fact that the market rally seems to be narrowing and narrowing and narrowing more and more and more every single day. This is the week-to-date change of all the mega cap 8 stocks. The only one that's green this week is Nvidia, up 4.5%. The rest of the mega cap 8 is red. Tesla this week alone is down basically 11%. And this is just because they can't get a positive headline to save their lives. I mean, everything coming out with Tesla right now is negative, and I guess that's probably why everybody is selling. But that's something I do on this channel, and I've said it before. I think this is why individual retail investors oftentimes underperform the markets. How I have had success and how a lot of the greatest investors of all time have had success is they buy undervalued stocks when nobody else wants them. But I mean, look at this. This news came out this week. Tesla shares skid after China sales fell to the lowest level in over a year. And this makes sense. The Chinese economy is in recession. It has been in recession, which means there's less demand for Tesla's vehicles overseas in China. And you also have the fact that Tesla is facing increased competition from domestic Chinese producers of electric vehicles. And then even more recently this week, this news comes out. Tesla halts production in Germany after suspected arson. I mean, this is comical. I've already said this is almost funny because Tesla, everything that's written in the news right now about Tesla is negative. And this has happened before with the stock. It's negative and negative and negative, and then all of a sudden they get one good headline, and that signals the bottom, and the stock starts to recover. This is just a cycle that happens again and again with Tesla. And actually, right now, this is the first time I've ever owned Tesla stock. I bought a Tesla vehicle, a Model 3, back in 2021. I absolutely love it. But actually, in 2024, and I guess I started buying in late 2023, that's the first time I've actually owned this company, because I think it's a great buying opportunity right now where things are as bad as they can get. I mean, Tesla halts production because of suspected arson. When you see headlines like that, you know it's pretty dang close. If not, you're at the point where things are as bad as it's going to get for the company. And at that point, it means that most of the sellers are gone, and any good news headline could be enough to spark the stock higher. But again, if it doesn't happen, if the negative headlines continue, I'm going to keep buying more and more and more and more. But to prove this point even more, Old Lion 64, and I love this guy. He's one of the most active community members here on this YouTube channel. He says, agree with everything except Tesla. Tesla is doomed. The fanboys are bailing out for AI. EV as an industry won't be viable for decades, if ever. Hybrids just make more sense. There is also no infrastructure to support EVs except for a few niche places around the world. There also needs to be a way to expand the grid, or you will be paying $1,000 a month for your home electric bill, as they cannot even produce enough electricity to satisfy current demand. Solar and wind will not come close to making up for it. The only hope is a new technology or nuclear to produce cheaper electricity. All I have to say is I completely disagree with this thesis. And again, I love Old Lion. I love him to death, but I disagree with this. You know what? Maybe my electricity bill has gone up, but it hasn't gone up $1,000 a month, and I'm saving money by not buying gasoline. And that was a huge advantage not long ago when gasoline prices were very, very high because of geopolitical tension overseas. But it's true, when people that are bearish on Tesla are comfortable enough to come out publicly and say this sort of stuff, gosh, it's about as bearish as it can get. I mean, Tesla is one of the fastest growing companies in the world. I personally have not had any issue with infrastructure to support me driving my electric vehicle. But anyways, another thing that's been dragging Tesla's stock price down is this, and maybe this kind of summarizes everything. Tesla's forward operating earnings per share. So these are analysts' average forecasts, and you can see since the middle of 2022 how analysts' forward projections for the company have been revised lower and lower and lower, and then back up again slightly, and then way lower again. And we're sitting right now at 3.26 estimated forward earnings per share for the company. And obviously, if the overall profitability of a company comes down and they're valued for extreme growth and extreme profitability, the stock price is going to come down. Anytime you have analysts downgrade stocks on the basis that their forward earnings are coming down, it generally means the stock price is going to follow. But this is as a result of Tesla lowering the prices on their electric vehicles, and I just don't think the markets see it right now, but Tesla is totally cornering the electric vehicle market. Nobody can offer as quality of a vehicle as Tesla for as cheap as Tesla can offer it. So everybody in the market, if you're going to buy an electric vehicle, chances are you're going to go buy a Tesla. And Tesla could absolutely dominate and control the vast majority of the total addressable market with electric vehicles sometime in the not too distant future. And guess what? If that happens, the forward operating earnings are no longer going to be an issue. The forward revenue numbers are no longer going to be an issue. And the stock price of Tesla, it's going to go up a lot. And then you stack in their solar business and insurance and all these growth levers they can pull, and you can see that Tesla someday, maybe in the next decade, will be the most valuable company in the world. But honestly, I don't have enough time in this video to show you all the negative catalysts coming at Tesla stock right now. I haven't even mentioned Elon Musk and how his focus is on X, and that's distracting him from operating Tesla. And there's so many, thing after thing after thing that we just don't have time for today. But that's exactly when I want to be buying a stock. When I know it's going to be around for years and years and years to come, it's going to continue to be one of the fastest growing companies in the world. They are undervalued. Nobody wants to own it right now. Everybody is fearful about Tesla right now. So I'm going to be greedy. Maybe that makes me a sick individual, like the title of this video suggests, but that's just the way I operate. That's how I have outperformed the market over the last couple of years. Now, moving on to PayPal. I'll talk about them briefly too, but this situation is not much different from Tesla's. Nobody wants to own PayPal stock. You can see year to date, down 5.5%. Over the last year, down 22%. Over the last 5 years, down 39.26%. And since July of 2021, down 81.16%. Nobody wants to own PayPal right now. And again, it's the same thing. All of the news headlines are negative. PayPal is going to lose market share to Apple Pay, and Stripe is stealing their lunch, and Amazon Pay, and Shop Pay, and yada, 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 yada. Who even uses PayPal anymore? I think that's the most popular question from bears on the internet, and chances are those people that are questioning who uses PayPal, they use PayPal every day. Whether that's via PayPal, the platform, whether it's via Venmo, they own Venmo, or whether it's through Braintree or their unbranded checkout business, they're probably using PayPal because PayPal controls such a large percentage of the global e-commerce market. And you've also had investors and traders looking to make a quick buck comparing PayPal to Meta a couple of years ago. And maybe it's a similar scenario, but this is taking a longer time to play out if that's the case. And as a result of that, people are losing patience. And they are selling their PayPal stock because it's not going up right now. And I am missing out on all these AI stocks that are just skyrocketing. I'm sitting here in PayPal stock and I'm down 5% on the year when Nvidia is up yada, yada, yada percentage this year. I'm just wasting my time and money. Why would I own PayPal stock? Well, again, boils down to nobody wants to own this stock right now except me. That I want to own this stock. If you want to sell me your shares, I will gladly buy them. PayPal right now is priced for zero growth. Zero growth. That's the way the market is valuing the company right now. And even the management team's sandbagged and disappointing guidance projects them to grow 6 to 7% over the next 12 months. So the company is valued for 0% growth, and this so-called disappointing growth that the management team guided to is above that 0%. So based on these numbers, and it doesn't have to happen overnight like a lot of people think, based on these numbers, if PayPal comes in and they grow their business and they match management's guidance or exceed it, which I think they'll personally do, the stock is going to go up, and it's going to go up a lot. I'll share with you my spreadsheet at the end of this video, but I think the fair value for PayPal currently is basically double the current share price. Now, the CEO of PayPal just spoke at an investor conference with, I think it was JP Morgan, and he gave one paragraph that was very interesting to me. It's something that I was pretty sure of, but a lot of people doubt it. He said, and this is in relation to the guidance they gave that was supposedly disappointing. I've been here for 4 months. Most of the team just for a couple of months. It was prudent for the first guide of the year to be very thoughtful with the flexibility that we needed. That was just the smart way to think about it. We want to put points on the board before guiding to those points. Under promise, over deliver, says Brad Freeman, stock market nerd on the platform X. So what Alex Chris said at this conference all but confirms it. Their goal was to under promise and over deliver. In the past, PayPal has guided and they have either matched that guidance, which matching guidance a lot of the times is not good enough on Wall Street. You have to beat your guidance if you want your stock to go up, or they've missed their guidance, which if you miss your guidance, that's really bad, and Wall Street starts to disrespect the company and the stock because they can't trust the management team. So Alex Chris, in his first full quarter as the CEO of this company, has officially reset all expectations for PayPal, the company. And again, they guided for 6 to 7% revenue growth this year. I think it's going to be closer to 8 to 9, maybe even 10% revenue growth this year. I firmly believe that they sandbagged their guidance so that they can underpromise and overdeliver. And again, if that's the case, you're going to see PayPal stock skyrocket in their next earnings report, because right now the stock is priced for 0% growth. So let me show you my price target spreadsheet, and this is made available to my paid monthly members. If you're interested in joining that membership, it helps me out tremendously. You get access to my buy and sell alerts, a bunch of other perks like my spreadsheets and due diligence, and it supports me and helps me avoid all the crappy sponsorships that other YouTubers have to take. So I greatly appreciate it. This is an amazing community. The membership's been growing like crazy. If you're curious about it, hit the join button located right next to the subscribe button, or hit my Patreon link in the pinned comment. The first sheet that I have in this Excel spreadsheet is showing analyst expectations for the company. For 2024, they expect earnings per share to be $5.13, and they expect the sales to grow 6.9% to $31.83 billion, which means the forward PE ratio on the company is 11.54, which again is a reflection of the fact that the stock is priced for 0% growth at this point. Wall Street is convinced that PayPal is a mature company and that their growth days are behind them. If you listen to PayPal's most recent earnings report and their conference call, you would know that the management team does not believe that at all. They believe they have tremendous growth opportunities ahead of themselves, and they're going to invest the cost savings of making the business more efficient into those growth initiatives and those growth avenues for the company. But yeah, analysts have them growing 6.9%. You'll see that I have them growing this year at 9.9%. Remains to be seen, but the first quarter under Alex Chris's belt looked really good. Revenue growth looked really good, and I think for full year 2024, they can achieve this, 9.9% to $32.75 billion. If this plays out and PayPal continues to buy back their shares, they mentioned they want to buy back at least $5 billion worth of shares this year in 2024, I have the fair value for the company based on a 25 forward PE ratio, which PayPal has actually historically traded at 30 or 35. Based on a 25 forward PE ratio, I have the fair value for the company sitting at $126.84. Again, basically double the current share price. So if PayPal's valuation just somewhat normalizes again and is more in line with what the market's at currently, that's already seeing tremendous return by investing into PayPal. And if their numbers continue to grow, I have the fair value for the company based on 2026 numbers being $215.88. I might revise this if PayPal stock does recover. I might consider the fair value $259.05 if I think the company and the stock warrants a 30 forward PE multiple at the time. But this is still a couple years into the future, so I'm going to leave it at a 25 forward PE multiple and a fair value of $215.88. If this plays out over the next 2 years, I expect to see 268% return in my investment into PayPal stock. Now, unfortunately, I don't have a crystal ball. There's no guarantee that this is actually going to happen. But this is what I view the fair value for the company being. And until it reaches this point, I'm going to hold my shares unless something fundamentally changes for the worst for the company. Now, I mentioned in yesterday's video, which if you missed that, go watch it, click the eye in the top right-hand corner. I mentioned that I'm considering purchasing some more PayPal call options, specifically with a expiration date of December of 2025. And I want to buy the $110 strike prices. Again, there's no guarantee. I don't like to put a timeline on when a stock has to move by for me to be able to profit, but I see a great opportunity for asymmetric return by investing into PayPal and their call options. And I really want to take advantage of this opportunity because opportunities like this don't come around that often in the stock market. And whenever they do, man, I want to jump on them. I want to own as many shares as I possibly can. And you know what? If PayPal continues to trade down in the 50s and 60s and 70s and 80s, oh boy, I'm going to continue to buy the stock. And again, keep an eye out. I might end up buying some more PayPal call options here in the not too distant future. If you want access to those options, buy and sell alerts, that's another tier in my membership. It's a perk you get. So yeah, if you want to join my membership, again, hit the join button located right next to the subscribe button or hit my Patreon link in the pinned comment. But with that, I'm going to end this video here. If you guys are new here or returning and not yet subscribed, please subscribe down below and leave a comment. Am I sick for buying PayPal and Tesla stock when nobody else wants it? Am I missing something? I love to hear everybody's opinions because it helps me come up with a better opinion for myself. But with that, have a great rest of your day. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.